called asset-based long-term care. And the nice thing about those, and there's two different kinds. But the nice thing about those is that if you don't use it, there's a death benefit that's paid to the beneficiaries. In either case, whether it's a real long-term care or it's a chronic illness rider, either one, they both have a death benefit where something will be paid out to somebody. So the money is not wasted. And I find that that's a far more palatable conversation to have with people. They like that idea, and basically, it's really good for lazy money. So if someone has $50,000 in a CD at the bank, transfer that money into a single lump sum payment of a asset-based long-term care. And maybe for 50,000, again, I'm making up numbers. These don't have any basis of reality, but maybe he gets 5 times as much of the deposit, $250,000 of long-term care benefit, and maybe $100,000 of life insurance benefit. I don't know if that's always how it works, but imagine that you've got your long-term care benefit taken care of. Maybe it only lasts a year or two, better than to have something than nothing. And then even if you don't use it, something's paid out to your named beneficiaries. It's a very smart way to allocate those assets. And plus, if it's a life insurance based contract, you can still borrow against it, pay it back. It's still accessible money. There's ways to use it. Might have a slight tax bill, but not a big deal. Only be on whatever it earns in interest. So that's a possible option. That's a far more palatable thing rather than I'm paying $10,000 a year. And if I don't claim something, the last thing you want to do is try to induce a claim. Don't try to do that. They call that a very technical term called fraud.
Yes, that is a technical
We ain't doing that.
The asset-based long-term care, I think, is a great solution because it kills two birds with one stone, right? So it gives you life insurance, a permanent life insurance policy, and it gives you access to use that for that policy for long-term care if that needs should arise. And I agree, that's a lot of the reasons why people more or less hesitate buying long-term care, because a lot of the policies are, use it or lose it type policies. There's not a lot of return a premium out there or anything where you get your money back or something after so many years or something like that with a long-term care policy. There's not. I don't really see any of those. There are inflation riders you can put on long-term care policies where it'll help increase every year, where the benefit will pay out slightly more. But there's not really any return of premium type thing. Whereas at least with an asset-based long-term care type policy, you know what? To Kinder's point, I don't know if 50 grand is going to turn into 100 grand. That's going to depend on your health and your age. But let's just say, even 50 grand turns into 60 or 65 grand. You've got an extra 10 grand in death benefit or 15 grand in death benefit right off the top. Now you've got long-term care paid for, and you can build the policies however you want, as far as how long they'll pay out, how much they'll pay out every day, things like that. And you can, fine tune them so that it makes sense for you. So I think, and then, you can do, like you were saying, a lump sum, or you could even do a 10 pay or a 20 pay, or there's different pay options that you can do with these asset-based long-term care policies. So, maybe you don't have 50 grand right now, but you want to put in 50 grand over the next 10, 15, 20 years. Well, you can build that too and put, 5 grand a year into the thing. And the nice thing about that is that if you file the claim in the meantime, you'll still have that death benefit, and you'll still have access to all of those long-term care benefits without having to put the whole lump sum up. So, there is a good argument to be had for funding it, not just in a single lump sum, but also over a period of years, whether that's 5, 10, 15, whatever, whatever your insurance company will allow you to do.
Yeah, and having it prepaid, or at least on a minimum payment basis, and I mean that, based on number of years, not necessarily the premium amount, that can be very advantageous. And you're still planning for a legacy to be passed on, even if you don't use it for long-term care. So either way, those dollars are at least doing double duty in that respect.